Good evening, everyone. Let's start the meeting. Let's go in the order of raise hand. So, Kirti, please start. Turn on your mic and camera, please.
Good evening, ma'am. Good evening to everyone.
Good evening.
Actually, I have an issue because my presentation, which is scheduled today, I have already given it in the presentation, and I have also got his marks. But when I schedule a presentation, the same presentation got rescheduled again. So what do you do?
What you can do is just try to reschedule it again. If you are facing the same problem again, you can
Yes.
just mail on support@hekveda.in. Okay.
Okay. Okay.
So next is Pushpak.
Good evening, ma'am.
Good evening.
Can I share the screen?
Yeah, sure.
Yes, ma'am. Is my screen visible?
Yeah, it's visible.
Yes. So good evening, everyone. I'm Pushpak Suryawanshi from Machine Learning and Deep Learning Group. And today I'm going to give a presentation on the topic Exploratory Data Analysis, which we also called as EDA. So these are the contents which I'm going to present today. First is that we are going to look at a task which I'm assigned to. Second is the introduction. Third is the data set which is given by me by Hackveda. Fourth is the methodology which I've used in this task. And next is the outcomes and the findings which I've got through the task. And finally, we will see the conclusion. So first, let us see at the task which I've given by Hackveda. So the task was to perform exploratory data analysis on a given data set to gain insights and uncover and discover patterns from the data set. So the data set given to me was the credit card fraud detection data set from Kaggle. So the task was to perform ED on the data set using Python and using Jupyter Notebook. Then to summarize key findings and uncover hidden trends and patterns from the data set was the major task. Then to visualize the data using appropriate charts and graphs, and finally to identify any outliers, missing values, and anomalies in the data. So this was a basic task given to me. Next, we'll see the look at the introduction. So talking about the data set, so credit card fraud detection is a critical area in the finance industry, and it helps prevent fraudulent transactions that can cause significant financial losses for both customers and financial institutions. So credit card fraud detection means that a customer is charged which he's not paid for anything, and it is detected as a fraud. So we have a data set given to us by Hackveda, which includes all the details of the customer as well as whether it is a fraud or not. So next, we'll look at the EDA, which helps in crucial understanding of the data set and analyzing the data. It involves several steps such as data collection, data cleaning, data visualization, and which includes plotting graphs. Also, it includes outlier detection and correlation analysis, etc. Also, EDA includes techniques such as feature engineering and feature selections, which helps in extracting important features to for a prediction of the which improves the prediction of the algorithms. So also we have used also the EDA consists of correlation analysis, which helps in comparing different features of the data set and identifying which two or more features correlated mostly and help in prediction of the machine learning algorithm. So in this task, we are going to more focus on EDA. The more focus will be on EDA than machine learning algorithm. But I have used one machine learning algorithm to find out whether our EDA which we have performed is crucial or not, and which will help in machine learning algorithms. So I've used logistic regression algorithm here. So let us see the next slide. So next slide is the data set. So the data set given to us is the credit card fraud detection data set, as we have seen before. It consists of over 2.8 lakh rows, which consist of different transactions transaction by the European cardholders in the year September 2013. So out of 2.8 lakh transactions, we have almost 500 frauds detected. So this is the data set, and this V1, V2, V3 are the variables of the data set. These are kept confidential, as it is a confidential data, and the variables are not given exact names. So the names are like that: V1, V2, V3, etc. So we have almost 28 features here, from which we can calculate the class. We have to predict the class. If the class is 0, that means that the transaction is not fraudulent, and if the class is 1, which means that the transaction is fraud. So we have also the amount column here. Amount column indicates that how much for a particular transaction, how much is the amount processed during the transaction. So this was all about the data set. Next, we'll see the methodology. What is the proposed work during the task which have gone through, and what are the works have done during the task. So first, let us look at the descriptive analytics. So what is descriptive analytics? So there are basically 4 types of analytics, like descriptive analytics, diagnostic analytics, predictive analytics, and prescriptive analytics. So first one is the descriptive analytics. So descriptive analytics involves analyzing historical data to understand what has happened within an organization. For example, if an organization has faced a loss at a particular period of time, then descriptive analytics tells us that what exactly happened, that the organization faced losses, and helps us identify the main issues that the organization from which the organization faced losses. So descriptive analytics basically tells that what has happened in the past. So there are many descriptive analytics techniques which we use here. So first one is the descriptive statistics. Descriptive statistics includes calculating mean, median, mode of the data set, which are the main aspects of the data set. They help us to identify the central tendency and the variability of the data. So next is the data visualization, which also is a technique of descriptive analytics. Data visualization includes creating graphs, charts, and plots, which help in understanding the data more. Next is a frequency analysis, which include the counting the number of occurrences of a given feature. From it is an important feature which will look in the code, and it helps in finding a lot of useful insights from the data set. Next is a correlation analysis. Correlation analysis, as we have seen before, that correlation measures the relationship and strength of the between the two variables. So if the two variables are related, there is a positive correlation, and if the two variables are not related, there is a negative correlation, and the correlation value is called the correlation coefficient, which ranges from -1 to 1. So these are the common descriptive techniques that I've used in this task, which we'll see later in the code. So let us see what is EDA. So EDA, in simplest words, is the detective work you do on a data, making any serious conclusion. So EDA is basically doing is being a detective on the data. Means being a detective. We must have seen in movies that a detective. What a detective does is he or she finds the first, it explores the what is the case study first, then she finds that what are the uncovered mysteries behind the data, and what are the hidden things on the case study. So EDA exactly does that it uncovers hidden trends, patterns in the data, and helps us identify what the data exactly consists of. So basically, the need of EDA is to understand the data and identify patterns within the data, to more uncovered hidden trends behind the data. Then the cleaning the data is also a part of EDA. Then formulated hypothesis, whether the uh, what is the hypothesis testing we can measure while using the EDA. So while by exploring the data, we can generate ideas and hypotheses to investigate further, and further analyze the data more, and uncover hidden trends and patterns. Finally, EDA also consists of feature selection. Feature selection means identifying the most important features which will improve the accuracy of the model, and helps in basically, feature selection is the selecting the most relevant features to improve the accuracy, which help in accuracy of the machine learning algorithms. So next, I have created a small demonstration of how what EDA consists of. So EDA consists of data collection, data cleaning, descriptive statistics, data visualization, feature engineering, building machine learning models, outlier detection, correlation analysis, and feature selection. So all these comprise, when all these things come together, we form the EDA. So EDA comprises of all these things. So let us look particularly what is data collection, data cleaning, data visualization, feature selection, etc., etc. So data collection basically is gathering data from various sources such as APIs, databases, Excel files, text files. In this case, we have used the comma separated values files, that is CSVs. Data cleaning consists of identifying errors, missing values, invalid data, incomplete data, and handling missing values. So there are many techniques included in data cleaning. Data visualization, we have seen before that it consists of creating visual representations such as charts, graphs, etc. So next is descriptive statistics, which we have seen that it includes calculating mean, median, and mode of the and standard deviation, variance, etc. of the data set. Then feature engineering and feature selection, we have also seen these things, that feature engineering. So what is the difference between feature selection and feature engineering? Feature selection means identifying the most important features within the data set, and which will improve the accuracy of the machine learning algorithm. Feature engineering, on the other hand, involves creating new features which will help in more understanding the data. So in this data set, for example, the time factor, which is in seconds, so we have converted into hours. So it is an example of feature engineering. So next step is the model building. We have used logistic regression model here to evaluate the performance of the model. So EDA, after EDA, we built the model. help us with whether our EDA is beneficial or not for us. Then correlation analysis, we have already seen this. Outlier detection. So outliers are the values which deviate from the mean, and significantly deviate from the mean, and can if they are in the data, they can reduce the accuracy, and if there are any if there are more outliers in the data set, the descriptive statistics will fail, as the mean will increase, the median will increase a lot. So it's important to remove the outliers before training the data set. So these are the outcomes and findings. So before that, let's come to the code first. So this is the code. So first, in this code, we have imported libraries necessary. We have included Matplotlib, NumPy, Pandas. NumPy, Pandas are for mainly data cleaning and EDA processes, and Matplotlib is for data visualization. Logistic regression for machine learning algorithms. Rest all is for evaluating the matrix, and train test split is for splitting the data into training data set and testing data set. So first we read the data set, then we compute the first 5 rows of the data set to look what the data set consists of. So it consists of over 28 variables, and the last 2 columns, that is amount and class. So first step is to do the data cleaning. Data cleaning means checking for missing values and removing it. So by using the isNull.sum function, we print that are there any missing values in the variables or not. So we can see here, we can see that there are not any missing values in the data set. Each and every value is coming 0, which means there are no null values in the data set. The next step is performing EDA. In EDA, there are 3 stages. First is univariate analysis, secondly bivariate analysis, and third multivariate analysis. So firstly, we do the univariate analysis, which means taking each feature and calculating the count of it, means frequency of it. And this is the most important phase of this code, calculating univariate analysis. By calculating univariate analysis, we get many important conclusions, which are very useful for computing the findings of the EDA. So we first take the time feature first. We can see here we get a seasonal graph, which means that only a specific points the results are low, and we can see here the graph is going down, where is at the 0 second and the 1 lakh second, which means that if we convert these seconds into hours, it will indicate that at night, means at 12 a.m. the results are low, means the transactions are low during the night, which is true. So the finding is that there are 2 peaks in graph. As we can see, the data set is for 2 days, means if we convert this seconds into hours, we get the data of 2 days. We can relate the 2 peaks corresponding to 2 times in each day, where maximum number of transactions that are happening, and the transactions that are happening in the night are low, relating to the transaction during the day. So next we take the class column. Zero value indicates that these are the non-fraudulent transactions, and one indicates that these are fraud transactions. So we can see here the fraud transactions are very low compared to the non-fraud transactions. So we can see here this is the huge this condition is called imbalanced data set, which means that there is a huge difference between two classes. So this data set is considered as imbalanced data set. So next we have calculated the same thing, that is we have taken the same features, that is time, but in this case we have taken we have categorized them into fraudulent and non-fraudulent transactions. So we can see here in case of fraudulent transactions, the transactions are done over so they are distributed equally throughout the day, while non-fraudulent transactions are are less during the night compared to more during the day. Next, we have plotted a KDE plot, a HIST plot and a scatter plot, which indicates the relationship between the time and the amount. It is an example of bivariate analysis, which takes two features at a time. So we see that this is the time means during the night the transactions are low, and the amount during the amount of the transaction during the day is higher compared to the night. So this is the describe function we have used to gain a statistical summary of the data set. So this is the descriptive statistics we have used here. We calculate the mean, median, and standard deviation of the amount. So we can here see the mean amount of transaction is 88 rupees or dollars. In this case, it will be dollars most probably, as the data is from Europe or UK. Yeah, it is from Europe, so it will be 88 euros most probably. Median amount is 22, means the middle value, and the standard deviation from the mean is approximately $250, 250 euros. Then we have done a feature engineering. So in feature engineering, we have basically converted the time column which was in second, we have converted it into hours for a better visualization. And finally, we have done here multivariate analysis by using the heat map. So we can see here the values which come close to 1 are highly correlated, and the values closer to 0 are less correlated. We can see that these are the two findings we get from this heat map, that there is a strong negative correlation between the class feature and many of the features such as V17, V14, V12, and V10. And on the other hand, there are also some features that have a strong positive correlation with each other, such as V2 and V5. So then the next step is outlier detection. So we remove the outliers by using the Z-score technique. So if the Z-score is greater than 3, the values are considered as outliers, and we remove them. So by removing them, the length of the data set after removing the outliers decreases by almost 4,000 values, 4,000 data points. Then we use the feature selection technique here. In feature selection, we identify the most important features required to predict the class. We here use the technique of recursive feature elimination, and we select the most appropriate 10 features required for us to predict the class. So we can see here we get the output as these 10 features are the most important to predict the class. Then finally, we have here used a logistic regression model to evaluate, and we have evaluated the score of this model, and also determined that how important EDA is for us to improve the accuracy of the model. So by using EDA, we can see that the accuracy is almost of 100%. which is not possible if there is no EDA. So EDA is important. So, and we can also see here the other conclusions that the precision score is 88, 0.88, which means that 88, almost 88% of the value is correctly predicted by the model, and compared to the is correctly predicted by the model of the non-fraudulent transactions. And also we can see here the recall score is 61%, which means that out of all the fraudulent transactions, the model correctly identifies 61% of them. So these were the all steps of the task. So coming to the presentation, so these were the all outcomes and findings from data cleaning and data describe functions which we have also already seen in the code. These are all the conclusions from the descriptive statistics, that mean, medium, and standard deviation. This also we have seen in the code from feature engineering phase and correlation analysis. And these are the final outcomes that we get from the outlier detection phase, feature selection phase, and machine learning by building the machine learning algorithm. So finally, the conclusion. So in this project, we have tackled credit card fraud detection data set, which consists of almost 3 lakh transactions. So it consisted of no missing values, and we can from the statistical summary, we found out that 99.8% transactions were non-fraudulent, and almost 0.172% of the transactions were fraud. So using we have finally used a logistic regression models to and also found out the accuracy and precision recall score by evaluating the model. Then also this project can be used for other similar fraud detection tasks as well across different domains. So these are some of the references that I've taken from. So if you have any questions, please feel free to ask here at my email ID. So thank you. This was all about today's presentation. Thank you for giving me this opportunity to present this topic. Thank you, ma'am.
So Pushpak, you are done?
Yes, ma'am.
So actually, I have some questions. Like you have in your practical, you have all seen that variable. So what does that variable mean? You know, like you have represented from V1 to V20. So what does that variable mean there?
Ma'am, actually, these variables are confidential. Means actually this is a confidential data. So they have not specified that what are these particular variables from V1 to V28, because these are confidential. So they do not from the data set, it is actually the same values V1 to V28. So as this is a confidential data, they have not specified what particular these transactions are.
Okay, if it's confidential, then how you have made those graphs and the conclusion that you made? How is that possible then?
Ma'am, actually, I've just found out the correlations between those features and found out the different values of it, and according to it, we get the predictions of the class.
Okay, and what does class represent there?
Class means the class has two values, 0 and 1. 0 means that the transactions are non-fraudulent, means there is no problem and in that particular transactions, and 1 means that it is a fraud transaction.
Okay, and one more thing, you have outline detective, you have said median should not be increased. Like what if it has increased? And how will graph be indicated by that?
Ma'am, actually for a particular data set, the data set values should be in the normal curve. Means the mean should lie in the center. Mean median mode should be lie in the center. But if there is an outlier, the mean shifts towards the positive side or negative side according to the as there's a huge deviation between the mean and the data value. So it further it can cause problems. So it's important that to remove these outliers so that it can improve the accuracy of the model.
So like what problems can we face if the mean is like in positive or in negative?
Ma'am, if the mean is a positive, the machine learning algorithm cannot clearly specify that what means the data set values cannot be equally distributed amongst themselves, and the machine learning algorithm cannot find the correlation between the data points. So the accuracy will be very low.
Okay, the algorithm that you've used in your like presentation, like is there any other algorithms that we can use? Like,
yeah,
so that
we can surely use.
For example,
decision tree, random forest, XGBoost, etc.
Okay.
Yeah.
All right. So talking about your feedback, so the practical part was explained very nicely. So that was a good part. Other than that, you have add too much of data on your like presentations. Like on every slide, there was too much of data.
Okay.
Like there was in point format, but the data was too much. And you have researched the well. That's nice. Other than that, you should work on your communication skills.
Right.
Okay, and try to add some more stories while you're explaining.
Okay.
More feedback I will just give on your mail.
Okay, sure.
All right. So next, Merc, you can start. Merc, are you there? Oh yeah, sure. Let me unmute you.
Oh, yes. Good evening, ma'am.
Good
Am I
evening.
audible?
Yeah, you are.
Yes, ma'am. Is the screen visible?
Yes, it's visible.
Okay. So my name is Merc Gonsalves, and I'm from the Web Developer Group. And the task that I've been assigned is the introduction to technical analysis. So moving on to the table of contents, we start off with the introduction. I'll just give you a brief introduction on the task that I've been assigned, and then we move on to the fundamental concepts, the pros and the cons. Finally, we just end with like the conclusion, the references, and then a Q&A session. So starting off with the introduction to technical analysis, basically in this now just the whole point of this presentation is just to help you understand what technical analysis is. We'll just be focusing a lot on like the trends, the patterns, and like how to read the graphs, how to understand, and what is the use of all the graphs that will be shown. And then using this data, it is important like in stock market analysis. We want to get into stock trading, or if you're like suppose new, you're not really sure how to trade stocks, or you're not really sure as to what are the patterns, like how to read like a certain pattern or something, or how to forecast basically if a stock could actually go up, go down. This is basically just to give you a basic understanding on all of these fundamental concepts. So moving on to like the fundamental concepts that I'll be going through, we'll just start off with like the charts, and then some more concepts like support and resistance, trend analysis. Then we go on to like the technical indicators, and then we just finally finish this fundamental concept of with volume analysis. So starting off with charts, some of the common charts that you'll see in while trading stocks is normally a line chart, a bar chart, and a candlestick chart. So I'll go into detail more on this, but this is just like a small overview. With this, a line chart, you'll basically just used to represent the prices over a certain period of time. It's up to you how like the time period that you want. But then this will basically just show either it's just going to like show the growth of a company over a certain period amount of, or a certain period of time. And then we have the bar chart. Bar chart will basically be used again to display the open, the high, the low, and like the closing of the stock in a certain time period. So again, this is up to you, the time period that you want to specify. And then finally, we have the candlestick chart, which is, in my opinion, a really great chart to understand. And as you can form a lot of patterns. And again, it's very similar to like the bar chart. It will give you like the open, the high, low, and the close. But then the candlestick chart is much more better for, information wise, to chart patterns or to look at the future trends. So just moving on to more in detail about these charts, we have the line chart. So basically in the line chart is just visualizing the change in the prices over a period of time, where on the x-axis, again, you'll be having the time. Again, that's up to you. How long you want to like set the time so you can check the growth of the stock. Then again on the y-axis we have the price of the stock. So then using this data, we plot points and then we join those individual points to form a line graph. And this line graph will just is just basically used to view the history of the stock, check where it went down, or if you like see a big drop, you can like read the news, see like what happened to it in like that certain period of time or something. But then this is normally good to check to basically check the history of the stock, if it has a good growth prospect. And then again, this will help you in your investing. Then next we have the bar chart. Now again, this bar chart is basically just used to like visualize the price of the stock over a period of time. So then as you can see, like on the x-axis, we normally will have the price, and like normally we'll have the price, and like on the y-axis will normally have the specific time period. So based on that, again, you can like plot like a few bar graphs at a time, and then you can like show the open, the high, low, and close, and you can basically this will be used to show like this is good for like intraday trading, where you can like check probably like after a day or after a certain time period that how the stock has performed. And then it's again easy to identify the upwards and downward movement in the prices. So moving on to the candlestick chart. Now this chart is very good for like a short-term trading, and it basically just represents all the changes in prices, and like it provides a lot of details. So now as you can see, the candlestick chart is made up of like two parts. One is like you can call it like the wick of a candle or something. It's normally called the shadows, and then this part is called the main body of the candle. So now the main body of the candle will just represent the open and the close. And the wick is normally just representing the high and the low. So if the graph, I mean, if the stock normally is returning a profit, it will normally be like shown in green if the stock has moved up. So then it's normally shown in green, and then the close is higher than the open, because that's what it means to like turn a profit. The closing has to be higher than the open. And then next we have, if your stock is, say, suppose it's returning a loss or like gone down a bit, here the open will be higher than the close. As you can see over here, the open will just be shown higher than the close, because that's how it works. Normally, if your opening price is higher than your closing price, you're basically made a loss. So this is how the candlestick works. And so again, this will again help you identify like the upwards and the downward trends. Okay, so moving on to the next fundamental concept, we have support and resistance. So support is basically like, suppose you're viewing a stock and it keeps falling from a certain price, but then it's not going to fall all the way to zero. I mean, there are going to be some people who still hold, who buy, and like they hold they hold it like they think that it will go up in the future. So they're thinking for the long term. They're not just buying and they're selling immediately. So they're thinking more of like the growth of the company. So suppose the stock is falling, I mean, not everybody's going to sell, so there's going to be some support basically. It's not going to fall all the way. It's going to just stop at a certain point, and then it's going to keep hovering at that point, and then it can even move up from that point. So basically, this will just represent like a strong demand in like they're like people who still want the product, so it's not going to go like much lower. And then we have resistance. So if a stock is moving in an upward trend, it will normally at some point it will meet some resistance, because not everybody is gonna want to buy, and like whoever bought also will start selling. So at some point, it's not always gonna keep going up. It's gonna meet like some resistance, and it will like either hover there, or it could hover there for like a few days and probably go up even higher after some time, or it could even go lower from there. So just to like show this in the more figuratively, yeah, this is support. Now suppose the stock keeps going down. This is like a certain level below which the stock never really goes below more. So this is what you call like the support up. It will normally just hover over here, and then it will like move up, and then this will be the resistance area. So like this, after the stock doesn't really go much higher than this point, because again, people are selling, or suppose the supply is more than the demand, suppose. So again, this will be the resistance area where the stock will again start moving down, or after some time again it could move higher if there is like some better news or something. But this is the support and the resistance. So now moving on to trend analysis. Now trend analysis is very important, like to suppose you're a beginner, or you're just like a starting out. It's very important to understand how the trends work, like what is the uptrend, what is the downtrend, or what is the sideways trend. You can't just keep investing on an impulse, or especially if you're a short-term trader, you don't really want to lose money. You want to like make more money. So you can't just keep investing on like impulse or rashly, basically. You need to like view the trends. You need to see because like now if you check uptrends is basically just the the price movement of the stock in an upward direction overall. Not just it could fluctuate a bit, go up and down a little bit, but the overall price direction should be upward. That is an upward trend. Then moving on to downward trend is basically the same as the upward trend, but in the downward direction. As I said, there'll be some slight fluctuations in prices, but then you have to check the overall direction of the stock price. So it will move if it's moving in a downward direction overall. That's again a downward trend, and then sideways trend as similar like to the previous two. If suppose a stock moves up and then it meets like a resistance level, and then it keeps hovering in that same area, like it just goes up and down, but it's normally in the same level. That we normally call the sideways trend. So just to show you what these trends are, this is basically an upward trend where you can see like there are gains, and then there are like small losses. It forms like a wave, but the overall direction is just like in the upward direction. And then similar, as you can see, like the sideways and like the downways, where there are like slight fluctuations, but then like the overall direction is like down or sideways. So moving on to the next fundamental concept, we have technical indicators. Now, these are three important technical indicators that I'm going to discuss, and these are very helpful in like for a slightly more advanced technical analyst, or basically these will help you to determine if a stock. This is normally used to predict if a stock could go up or it could go down. So starting off with moving average. In moving average, basically you're just taking the data and then you're smoothing out the price like to identify different trends. And then there are multiple types of moving averages. There we have like simple moving average and like exponential moving average. So let me just show you. As you can see over here in a moving average, this is like the whole graph of the data. This is the whole candlestick graph of the data. And this line that you can see over here, this blue line, this is the moving average that's calculated. So this is basically used to view like any upcoming trends or whatever data that you require. Then moving on, next we have the relative strength index or RSI. Now this is basically just used to measure the speed of the just basically like measure the speed and like the change in the price movement. So like if it's changing very rapidly or it's changing like not so rapidly, very slowly. So and then this basically the RSI basically will just oscillate between a scale of like 0 to 100. It will form two lines, and normally if the RSI is over 70, it's normally considered overbought, and if it's like below 30, it's like considered it's considered oversold. So as you can see over here, this is RSI 70, and then this will be like a 70. So this will be 100, and this will be about give or take 0, and then finally we have 50 in the middle. So finally, when this goes like below 30, it's basically just said to be oversold, and then finally, if it moves above 70, it's said to be overbought. So then finally we have we have like the moving average and convergence and divergence. So basically in this, it just consists of two moving averages, that is the fast and the slow, and like it will highlight the changes in like the trends, and then it will create like better buy selling opportunities. So moving on to volume analysis, we start off with like this basically has everything to do with the volume of the stock traded. So basically the trading volume is just the number of the shares that are traded in a certain period. Say suppose one trading session, which is like normally 1 day of trading. This is basically the trading volume. You can like view the trading volume, which basically means you're just checking the amount of shares that people are buying or selling. So it will again indicate the strength behind the price movements. Then we have the volume spikes. Now volume spikes are just sudden surges in like the trading volume. If suddenly like suppose some good news comes out, or suppose there's like some bad news, then people will instantly like if you're currently keeping up with the news and during the trading session, you'll normally, if it's like good news, you'll either buy, or if you already own it, you'll buy more of it. As you know, it's going to give you a good return. So these could again cause volume spikes, and then again it could if you watch it over a longer period of time, it could even signal like a trend shifts. And then we move on to like a volume confirmation. So in this, basically, it's just you're just in this basically like the lack of the volume is just going to show like there's a weaker trend, or there's like a weak interaction with the stock, like not many people are buying it, and then it's not really going to move too much up or down. So the trends are basically also slightly easier to predict with these, as long as the volume is down. But then if the volume changes a lot, again the trends could change quite a bit. Now moving on to the pros and cons. So the pros and cons, basically the pros of technical analysis is it basically relies on the historical data, and like it uses various mathematical tools that will be used to again form to like predict different trends. And then it is again applicable to like various time frames, either if you're a long-term investor or if you're just like an intraday trader. There are multiple different options for any person, like no matter how long you want to invest, you have like multiple options. And then the charts and the patterns are again used for like much better data visualization, because you can't just like sit in front of a computer and just like keep reading the data. You'll know if you have like a chart, it's much more easy and much more better to like interpret the data. And then for the cons, I mean, like different analysts will basically interpret the data differently. So not everyone's going to have like the same visualization. Everyone's going to have like a certain, some of them are going to predict it differently, and then so it's up to like different people to not follow the advice of everyone that you come across. You normally have to just do your own research and then study your own way, and like do things your way. And then next we have like the signals could be incorrect, which could again lead to like bad financial decisions, which again is not something that we want. But then it's not the signals could not always they are not like always 100% right. Sometimes there could again be like some small some major catastrophe or something, like suddenly again suppose a war breaks out, then that will again have like major like that will have like a major impact on the stock market. So that again, so it cannot be always 100% accurate. And then next we have the trader like needs to know the risks that they are taking, because they are investing their own money. So they should be aware of the risks, and normally they should be aware of the risk, and it's their own money. So they can either use it wisely and then make more money off of that. Otherwise, if they just invest like recklessly, they're just going to end up losing a lot of that money. So, like moving on to the conclusion, basically technical analysis is like a very important role in this like stock market analysis. If you want to become like a good stock market analyst, technical analysis is very important. And then this is basically just again useful why to uh, identify like different trends and like all the different types of trends, and then again it's used to identify support and resistance. Then you should make use of like a technical indicators like a moving average, then RSI and MACD. And then finally you can also like enhance the risk management. So using like the above concepts, you can basically utilize them and then minimize your risk, make better decisions, and then that way you can end up making more money. So, and then this will again, as I said, help you make help you make better decisions. So now, this basically concludes the presentation. If anyone has any questions, I'll take them now. Okay, no questions. Then thank you.
So you're done, Merc?
Yes, ma'am.
Okay, so first of all, you haven't added reference slide in your presentation.
Yes, I just realized that. Yes.
So do add that slide.
Yes.
Other than that, can you just show me your starting slides of like third or fourth slide?
Yes, ma'am. You need
Next, please.
next.
Next. Next. All right, Mer. So in the previous slide, you have only added 3 charts. Like, is there
Yes.
is there any other chart available?
There are pie charts, there are histograms also that you can use if you want.
Okay. All right. And in the last slides, you have added some words like MS, MA, RSI in your like conclusion slides.
Yes, ma'am.
So what
These
are
are,
these?
as I'd already explained these over here. I'll just show you this. These were already explained over here. The moving average and then the relative strength index, the RSI, and then moving average convergence and divergence.
All right. And you don't
MACD.
have any practical part in your presentation. Like, you have used your stock market and line chart and things like that. So what you can do is just analysis of that, like the line chart, and you
Yes,
have
ma'am,
added.
like these.
So yeah, these are only the pictures. You can have
Yes.
the practical portion of that. So try to add these on your next presentations. Other
Okay.
than that, your communication skills are very nice. Explanation was really nice. representation, like overall representation of presentation was really good. And try to add some stories as well. Like your explanation is nice. If you add some stories in between, it will be like, better way of that.
Okay. Thank you, ma'am.
Okay. So I will give your overall feedback on your mail. Okay.
Okay. Yes. Thank you, ma'am.
Okay. Shubhi.
Am I audible?
Yeah, you are.
Visible too?
Can you speak a little louder?
Am I visible too, ma'am?
Yeah, you're visible.
So I'll start my presentation
Yeah,
by
sure.
sharing my screen.
Yeah, sure.
My screen visible, ma'am?
It's visible.
Okay. Good evening, ma'am. Today my task is stock market prediction. I have to give an overview, the overall project synopsis of the project which I will be completing in the upcoming weeks, which is of stock market prediction. And I have to show the power of predictive modeling in stock market. So these are the contents which we will be covering in the upcoming presentation, which is problem statement, that what we are going to deal with, then introduction, basic terms, the types of two basic analysis, methodology, and further. Now, problem statement. The question arises that what is the challenge in this project, in this task? The challenge is to predict the stock movements. Now, why it is a challenge? Because predicting stock movements is a notoriously difficult task. It is really difficult as it is unpredictable and there are various factors influencing the market. So the solution to this challenge is to develop a model that uses both technical and fundamental analysis to identify the market trends. Now, the introduction to this project is that the stock market, what is stock market? It is a centralized marketplace where trading of financial securities takes place. Now, the financial security may represent the ownership in the company or claims on a portion of publicly listed company. For example, BHEL, Bharat Heavy Electricals Limited, has 51% shares under the government, which is not listed publicly, whereas 49% shares are listed publicly, and all people all over the world can deal with them. They can buy the shares in that 49% of the ownership of the company. Depending on their amount, how much they want to invest, they can buy the ownership of this company. What is the primary purpose of the stock market? The primary purpose of the stock market is to facilitate the buying and selling of these securities, which are typically in the form of shares or equities and bonds. Now, one is very well known aware that a company can cost up to millions and billions, and it is not a one-hand job for a single person to invest such big amount in the company and then start it all alone. Well, there are some rare instances where people have started their companies all alone, but generally this is not a trend. So people tend to borrow some money from the market. They invite the people all over the world. They invite normal people to come and invest in their idea or in their company, buy the ownership, some percent, some equity in their company, and also invest at the same time. This is beneficial to both the sides. The owner, the founder of the company, is benefited from the very fact that he has to not alone bear the profits or the loss, and he has all the amount that he is going to invest in his company is being shared. He can collect the funding, and the one who is buying the equity or ownership in his company is benefited that even if the company shows huge profits, he will also be benefited from the very same amount. Now, the basic terms, before moving on to the further understanding of the project, it is really important to understand the basic terms of the stock market, because if I'll use them in the further presentation, it might be really difficult to understand all of them. Now, first basic term is stock or shares. What are these stock or shares? So these represent ownership in a company or constitute a claim on a portion of a company's asset or earning. So owning stock gives the shareholder certain rights, such as voting in the company's decision or receiving dividends if the company gives some. For example, in Reliance, the Isha Ambani has 1.03% of the stake of Reliance Limited, which is really high in that company. And she can even vote in the board of directors meeting. She can vote for the election of the next chairman or CEO. So this very fact itself describes the importance of owning a stock or claiming stock, as it results in taking part of very important decisions of the company. Then what are exchanges? So stock markets can be physical locations or virtual platforms where buyers and sellers can come together to trade the securities or stocks or shares. Now, brokers. So individual investors usually do not have direct access to the stock market. They do not just go in the exchange and they exchange the stocks with anyone. No, that is not the scenario. Instead, there are brokerage firms that act as intermediates to facilitate the buying and selling of securities. The intermediate brokers, they talk to the seller, they take the shares, and then they talk to the buyer, and they act as a mediator between the buyer and the seller, and this is how the selling of shares take place. Now, bull and bear market. So these terms describe the general direction of the market. A bull market is described by rising price or profit, while the bear market is categorized by falling markets. Now, indices. Now, various stock market indices like S&P 500 or the Dow Jones Industrial Average are the measures that are used to represent the overall performance of a particular market or a segment of it. For example, I have one can say steel industry. If I want to know that what is the particular performance of the steel industry companies, the shares of the steel industry companies. So I can check the index of the steel industry, particular segment of steel industry, and that indices can tell me that over a week or a month, what was the current situation of the market, whether it was a bull market or a bear market. It showed an uptrend, downtrend, or sideways. Now, moving on to the technical analysis. So there are two basic types of analysis, technical and fundamental analysis. So technical analysis is used to predict and evaluate the future price movements of financial assets such as stocks, currencies, commodities, and indices. So what is the technical analysis is based on a such assumption. The assumption is that all of the factors, various factors such as the company's name, reputation, competition, all that is shown in its share price. So we don't get into much details about what was the company's past or history, what is going on, what are the competitors, how is the company performing. We just look on the share market. For example, if I have a Maruti Suzuki share being sold at 2,500 per share, then I will just look at the price and the historical data of the price itself to predict that what is the company's situation in the market. So the key components of technical analysis is first is price chart. So the price charts usually represent the historical price movement of an asset over a specific period of time. So if I want to look that whether I should purchase a share or not of the example I have given Maruti Suzuki, then I will look at its price chart over a month or 6 months, a week, or a year, depending on whether I want to be a long-term investor or a short-term investor. I will look at the price chart and decide. Now the trends. So technical analysts examine the direction of an asset's price movement to identify the trends. Now just merely looking at the price charts won't give me any information unless I derive any trend in that. If I'll see that yes, it goes in upward trend towards the October end, or when the Diwali season is coming over, where there are festivities all around the world, we can see that Maruti Suzuki shares are on an uptrend. Now it's the time when I'll buy, and during the festive time I will sell it, so as to ensure my profit. So these trends only can derive me some useful data. So there are three types of trends: uptrend when the prices are moving higher, downtrend when the prices are constantly moving lower, and side trends are when they move in a horizontal range. That is when the demand and supply that they nullify their effects and they are equal. So there are technical indicators too. So these are mathematical calculations applied to historical price and volume data to provide additional insight into market trends, momentum, volatility, and other aspects. So some common technical indicators include moving averages. So these smooth out the price data to identify the underlying trend. So one can definitely see that what is the moving average and decide that whether the company is making profits or loss. So there are two types of moving average: simple moving average, which is the aggregate of the different prices, and exponential moving average, which uses a complex formula. Then relative strength index, RSI, this measures the speed and change of price movement. Now the point to note here is that RSI always ranges from 0 to 100. If someone measures the RSI beyond 100 or below 0, then it is a blunder. Moving average convergence, divergence. So it is a trend following momentum indicator that shows relationship between two moving averages. Moving on to the fundamental analysis, the second type of analysis. So it is a method used to evaluate the intrinsic value of the financial asset, such as stock, bond, or a commodity. So as I've already discussed that in the previous technical analysis, only the share price was the major focus in our mind, and we were only looking at the share price while deciding whether to purchase or not to purchase. We were not interested in company's history or its competitions or what is its business model. But in fundamental analysis, we are interested in all these factors. We are interested in qualitative data also, at the same time quantitative data also. So the key components involved in the fundamental analysis are financial statements, which is known as quantitative data. So this involves analyzing companies' financial statements. What were the previous sales, for example, how much it earned during the last financial year, or what is going to be projected the next financial year, how the company is performing from the last 15 years or when it was founded, how the company has grown, what was the exponential growth, or it is just at a stagnant form right now. Then earnings and revenue growth also go under the quantitative data. So fundamental analysts also look for consistent growth in companies' earning and revenue over time. So steady growth is always looking as a positive indicator. If someone says, for example, that my company has grown 100 times or 100 folds in just a short span of 6 months, 3 months, then this is also not a good sign. This is a very dangerous sign. One can say that there is something fishy going on behind which one cannot see, as the companies cannot grow so well in such a short span of time. They can grow well, but in steady growth is often looked at as a positive indicator. Then valuation ratios are also there in fundamental analysis, such as price to earning ratios. So valuation ratios is one, for example, one is well aware of the fact that there was a serial which is known as Shark Tank, which was a very famous serial, daily soap. I would say that it was a very good platform for the investors to come and represent their ideas. At the same time, it was a very good platform for the market bulls who are really performing well in the market with their companies, who can look and the particular ideas and buy them, invest in their ideas. They can come to see that how well the entrepreneurship is being valued in India. So the way it was very sure that before Shark Tank, the companies which came there, their valuation was really small, just 7 crores, 8 crores, 25 crores. But post Shark Tank, once their product was aired on the television, the people come to know about their products, their valuation increased manifold times. So this is what valuation ratios. Then market trends and industry analysis. To understand a company, the broader economy, one has to really look into market trends. So changes in market conditions or industry dynamics can significantly impact a company's performance. For example, if I have a pharma company, Cipla, and I am manufacturing a vaccine for COVID-19, and I am producing it in 2010, where there was no sign or evidence of COVID-19, then my sales would not have been so high. Suddenly the year 2019 or 20 comes, 2020 March comes, and all of a sudden then people are discovering the symptoms of COVID-19. COVID-19 is coming into existence, and I already have a vaccine derived for the very same purpose. Then my shares or stock prices will rise. And this is because of the change in market condition. The market changed drastically. This is applicable to all the pharma companies who were producing medicines that were relevant in the COVID-19 period. Then competitive analysis. So assessing a company's position relative to its competitors help in understanding its market share, competitors, a competitive advantage and potential vulnerabilities. So it is very important that if one is performing really well in the market, then he has to identify his competitors. One cannot perform well unless and until he identifies the strength of his competitors. For example, Zomato and Swiggy are competitors in the food segment, food delivery segment. There are various others, but the major two are Zomato and Swiggy. So they both have to act just reading their data and analyzing their data, making decisions for the future growth of their company would not yield them that good results as compared when they will even read the competitive strategies, their competitive partner strategies, what he's applying in his business, what is his business model, how he's going to tackle such problems, how actually he's tackling the problems. That will also give him a very good insight and will surely ensure to gain profits in the very long go. Then management and leadership. So evaluating the competence and track record of the company's management is really crucial. One has very seen that in this scam 2003, that tailgate scam of stamp papers, it was very evident that the companies that were really buying the stamp machine was all his tailgates only. He has made many fake companies on the name of his friends, and the companies were only buying the assets of the stamp paper machine. So it's really important for a good investor to analyze that what is the past of the company, what is the management team, what are the relations between the different competitors, are they actually related or not, or is the position, the hit position in the company is heredity or it is based on the skills. If it's heredity, then the company won't perform in the long run. If it is based on skills, the company will increase its profits many folds in the near future. Then methodology, what we will do in the our project. Methodology refers to systematic approach or set of methods and principles that is used to conduct research, analyze data, solve problems, or achieve a specific goal. So in my project, which I'm being assigned, the methodology will consist of 4 steps. The first step is of data analysis. The second step is of feature engineering. Third is of algorithm selection, and fourth is of model training and evaluation. So data analysis has 4 steps. The first step is of data collection. The data collection means collecting data from various financial and stock market sources to form an analysis. Then second step is of data cleaning, to remove any outliers and resolve any inconsistencies and missing data. Now it is very well evident that if the data range is between 0 to 100 and some data is going beyond 500 or 1000, then they are considered as outliers. Now what these outliers do, they affect the accuracy of the data by shifting the mean. Now if the mean is shifted, then the distance, the variance is also affected, and if these all are affected, they tend to affect the accuracy of the model. Data exploration is the third step, to perform the exploratory data analysis to identify key patterns and relationships in the data. The last step of data analysis is data visualization. As we all know that pictures do speak louder even than words. So the pie charts and the line graphs, they all can help in understanding the stock markets or the data very well, instead of just writing it in the form of numbers. Now the data collection is really important point. So let us discuss in detail that how we will collect the data for this stock market prediction model. So it is a crucial step in stock market prediction, and the quality and relevance of data one uses can significantly impact the accuracy of the predictions. It is very true that if one is using a very good data, then the accuracy of the model will be very high. Whereas if one is using the data full of irrelevant data and missing values, and also at the same time the data is of no relevance to the model, then it can impact the accuracy of the prediction. So here are some of the important considerations that one has to consider while collecting the data for stock market prediction. So the data sources must be a historical price data. So this includes information on open stock, when the stock market was opened, high, what was the high price, low price, close pricing, as well as trading volume, that how much volume of the stock was traded for specific stock or market indices. Then market news and sentiment data. So news articles, press release, social media sentiment can also influence stock prices. One is very aware of the fact that the nowadays the sentiment data is very prominent in today's scenario. For example, one is very familiar with the data that once Ronaldo was giving a press conference. He was answering some of the questions in a press conference, and he just moved 2 bottles of Coca-Cola towards the side and just kept the water, saying only water. He didn't speak anything bad about the Coca-Cola or anything wrong, nothing, just he kept them aside. And that scene itself, that just a video clip of 30 seconds itself just impacted the market, and the stocks of Coca-Cola, they reached a very low point just by that single move. So market news and sentiment data also impacts the stock markets, and this data should also be considered while collecting the data. So fundamental data is the information about companies' finances, such as earning, revenue, debt, and other key matrices, which can be even collected by the company's data itself. Then data frequency and granularity. So one has to determine the time interval at which he has to collect the data. Now, if I am a short-term investor, I will collect the data weekly or even daily. I will just collect the daily data and I will analyze the data on daily basis to ensure that I invest and earn most of the profit. If I am a long-term investor, then I will collect data on monthly basis, and then I will analyze as collecting data on a daily basis will still provide me no harm, but it will be a very tedious task. I have to invest on long terms. I will invest it for months, and at the same time, if I study the data daily, then it will yield me no better results. Instead, I will study the data on monthly basis. So it is really important to determine that which type of investor one has to be, and on the basis of that, the frequency of the data must be decided. Then data cleaning and pre-processing. So one has to ensure that the data is clean, meaning it's free from any errors or duplicates and missing values, handling any anomalies or outliers appropriately. Then normalizing the data is also very important, as the data can range from the very small range to a very high range, and it is not possible as it also increases the computation time. And the accuracy as well as time both are affected by the high and low data, unnormalized data. So normalizing is really important, getting the data within a specified range so as to ensure that the computation does not take much time. Then feature engineering will be the next step. So feature engineering is critical step in building effective machine learning model for stock market prediction. So what is feature engineering? So feature engineering involves selecting, transforming, and creating features from the raw data that will be used as an input for the model. For example, I am creating a model for predicting the marks of a student in the final exams in math subject or a total subject. Let's take it as total subject. And then I am giving a data set which has their first name, last name, date of birth, their favorite colors, their favorite brands of shoes, shirts, ties. At the same time, I'm providing all the 4 subjects of marks. They have 4 subjects in their school. And then I'm trying to predict the marks of the 5th subject, which is going to be introduced soon in their school. So the favorite color, their lunch time, or the time at which the school opens are no relevant features. At the same time, I can combine all the 4 subjects of the marks into a single subject. So this is known as feature engineering, where I'm selecting some of the features which hold relevance in my prediction, then transforming, creating features from the raw data that will be used. If suppose I have a Hindi marks column and I divide it into Hindi literature or Hindi language, then this is known as creating features. So one can see that feature engineering involves creating, selecting, transforming features. So some of the feature engineering techniques specific to stock market predictions are moving averages. I have already explained that calculating various moving averages can help over different time period. These help us to smooth out noise and reveal any underlying trends. Then relative strength index. It is a momentum oscillator that measures the speed and change of price movements, which can be between 0 and 100. Then volume-based indicators. Then one has to really incorporate features related to trading volume to ensure that the stocks that are really being liked by the people who are buying them has more relevance in the model. such as volume, moving averages, volume spikes, etc. Then seasonal and cyclic components, we really assume that the history repeats itself. We believe in the very fact that history repeats itself. So the seasonal or cyclic trends, we always study them, and we expect that the last year during this season, October to December, was a peak season for buying cars. Surely this year also the trend will remain the same. Then news sentiment analysis, as very evident from the very fact that nowadays newspapers, social media, they all play a very important fact in making or destroying a brand. So using natural language processing techniques to extract sentiments or sentiment scores from financial news articles related to the stock market. Now, one thing to remember here is that all of the features that I have listed here, or there are many more that can be there present, are not relevant or will not be relevant for every prediction model or prediction task, and feature selection or dimensionality reduction techniques may be necessary to refine the features set. For example, I have mentioned here 4 features, or I will take into account 6 or 7 features further when I'll be creating a model. Then I have to keep in mind that these all features may not be necessary while creating the model. Might be I will be using just 3 features out of the 4 to ensure the best accuracy depending on the demand and need of my model. Now the algorithm selection. I have performed the data collection, followed by I have performed feature engineering. Now I will select the algorithm which I will use to train my model. So what is supervised learning? Supervised learning is the type of machine learning where the algorithm is trained on a labeled data set, meaning that the input data is paired with the corresponding correct output. For example, a mother teaches a small child that showing the shapes. She shows him a triangle and tells him or her that this is a triangle. If she shows her any image with 4 sides, she tells him that this is a square, followed by further different shapes. If there are single lines, she teaches him to say it is a line. So eventually he learns from this that if I will see 3 lines, he will immediately say this is a triangle, or if he'll see 4 lines, he will say this is a quadrilateral, and so on. So when we already tell the machine that if this is the question, then this is the answer, this is known as supervised learning. Some of the common supervised learning machine algorithms are: first is linear regression. So linear regression models establishes the relationship between a dependent variable and one or more independent variable. It is used for regression task where the target variable is continuous. For example, there is a common saying that if one practices more, then he or she is likely to achieve success better or more than the ones who practice less. So if I have provided a data set where there are 2 columns, number of hours studied and the marks, and one can see the number of marks are increasing as the time of studies is increasing. So this is the linear relationship, and one can apply linear regression in this model to achieve the desired prediction. Followed by logistic regression. So despite its name, logistic regression is used for binary classification tasks. So it models the probability that a given instance belongs to a particular class or not. For example, if I provide a data set in which there are again 2 columns where there is the marks and then there is the probability that they will be selected in their Olympiad or not, where 0 is that they will not be selected and 1 is for the probability that they will be selected for the Olympiad. If I apply logistic regression in this data set, a model created using logistic regression, then we can predict giving the and test marks that if this is the marks, what will be the result? The machine can tell us whether he or she will be selected or not for the Olympiad. Followed by the next algorithm is decision tree. So decision tree makes decision by splitting the data into subsets based on the value of input features. For example, I have 2 options that if I pursue, if I take maths, then I will pursue engineering, or if I'll not take maths, then I will pursue medical field. So this can be a 2-way, and this can create a tree where there are options. If there is a yes, then one can go this way, or if there's a no, then one can go that way. Further, if I have taken engineering, if I like management, if I have an interest in management, that will show a yes, then I will go in MBA. Or if I don't have an interest in management, then I have further 2 options, either to work or to pursue post-graduation. depending on the interest. So next is the random forest. A random forest is an ensemble learning method that combines multiple decision trees to improve accuracy and reduce overfitting. In our model, the stock market prediction, I expect the random forest to work at the best accuracy, but this is still a prediction. If when I will create the model, then the things will be more clear. Then model training. What is model training? Model training allows the model to make predictions and classifications on new and unseen data. Now, the mother has taught the son that if you see so and so shapes, react accordingly. Now, if I will show him the new types of shape, the first type, I will feed him the training data. I have shown him the book which he was reading, and then I have trained him with all the data which was available in the book. Then I will use the unseen data, such as the book which he has not encountered till now, and ask him that whether you are able to identify the shape or not. Similarly, in machine learning also, we feed the training data into the model, and then the algorithm uses the data to adjust its internal parameters. For example, weights in a neural network, or in random forest, one can say the maximum depth of a tree, or maximum leaf nodes, or minimum leaf nodes, through a process called optimization or learning. So the process of finding optimal parameters that minimizes the loss function is known as optimization. What is the loss function? Now the question arises. So the loss function measures the difference between the model's prediction and the actual target values. Now the model evaluation technique. One is very well aware of the fact that just learning cannot yield us good results until and unless we put some evaluation techniques on our learning. If we can't measure how good or bad we are learning the concept, then there is no use. We will be happy just by saying that, yes, we have learned this, but in reality, might we will not be able to apply the concepts in the real world. So model evaluation techniques helps us to assess that how well a trained model is likely to perform on new and unseen data. So there are various techniques for model evaluation. Some of the common techniques are confusion matrix. So what is confusion matrix? It is a table that provides detailed breakdown of classification models' performance. So it is particularly useful for evaluating performance of binary classification models, but it can be also extended to multi-class classification tasks. So one can see that it can be applied to multiple classification tasks also, but explaining the multiple matrix is really difficult in this presentation. It might require a separate presentation itself, as the concept is really vast. So in this presentation, for better understanding, let us understand the 2 by 2 matrix that contains 4 matrix, that is true positive. This is the true positive, positive and positive. These are the instances where the model correctly predicts the positive class. So for example, let us say that here are the males, and I am predicting whether the males are spam or not. Positive here represents that the male is spam, and negative here represents not spam. So the true positives are the ones that the male is really spam. True negatives are the instances where the model correctly predicted the negative class. So true negatives are here, and here if I am saying that the males are not spam and they were actually not spam, then one can say there is a true negative. Similarly, false positive, these are the instances where the model incorrectly predicted the positive class when it was actually negative. So in our example, it was actually a spam message, but it predicted that it was a not spam message, but the model predicted that it's a spam message. Here is the false positive. Then false negative are the instance where the model incorrectly predicted the negative class where it was actually positive, which means that it was actually a spam and the model predicted it as a non-spam. The next way of model evaluation is cross-validation. So it is a resampling technique used in machine learning to evaluate the performance of a model. The basic idea behind cross-validation is to partition the dataset into multiple subsets, train and evaluate the model on different combinations of these subsets, and then average the performance metrics. Let us understand this with better with an example here. One can see that I have performed the partition between the data. I have 1, 2, 3, 4, 5 subsets here. Similarly here, all these the 5 subsets. Okay, then I have seen that I have divided them into 5 subsets. In the first case, I have made the first subset as the test data and the next 4 as training data. I will train the model on these subsets and I will test the model on this subset. And then I will train the model on these, the blue ones, and then the test on the next red one. Similarly, the process continues. This method is a very robust method for evaluation, and it guarantees that the model really performs well on the test data. Then learning curve. A learning curve is a visual representation that shows that how the performance of a machine learning model changes over time as it is exposed to more training data. So there are 2 types of learning curves. Training learning curve. So this curve shows the performance of the model on the training data, which we provide to the machine itself as the amount of training data or training iterations. It helps us to understand that how well the model is learning from the training data. Similarly, we have validation learning curve. In this, the curve shows the performance of the model on the testing data set as the function of the amount of training data or training iterations. This learning curve helps us to understand how well the model generalizes to new unseen data. The advantages of stock market prediction is that it offers various potential benefits for investors, traders, and financial institutions. Some of the expected benefits are improved decision making. So machine learning models can help analyze really large volume of data and identify the pattern that may not be readily apparent to human analysts. So this can lead to more informed investment decisions. The second advantage is of increased efficiency. So automation of data analysis and prediction process can save time and resources for the investors as well as the institutions, allowing them to focus on much higher level strategic decisions. Third advantage is of risk management. So the predictive models can help them in assessing and managing risk associated with the investment. As one knows that there are profits and losses are just two faces of the coin. If there is profit, the next second can be a loss too. So risk management is also equally important at the same time of improved decision making. If one is able to invest very strategically, he must able be to even risk manage it at the same time. The next advantage is reduced emotional bias. So machine learning models operate on data and algorithm, reducing the influence of emotional decision making. So this can be particularly beneficial in preventing impulsive or emotionally driven trades. For example, nowadays we really have various models for understanding the stock market predictions, but in earlier times when the stock market was really started in the initial days, there was no such models. There was not the involvement of machines at such a high level, and people were really influenced by the newspaper articles or by just a saying of their friends. Even if their friend says that so and so company has a new chairman, he is an Indian and the company will surely do something good for the Indians, he was influenced by the very dialogue, by the very conversation, and he will go home and ensure that he invests in the same company the very next day without even understanding was the company of his interest or whether he will really gain some profits after investing. He was just influenced by the talk of his friend, by the advice of his friends that yes, the so and so chairman is newly appointed and he's an Indian. So this is not the correct way. So this is reduced by the machine learning models. Then the pattern recognition. So machine learning models are adept of recognizing complex patterns in the data, which human analysts might not even at a single time. So this can help them in understanding the potential trading opportunities in market. To conclude, I would like to say that a stock market predictor based on different machine learning offers a significant potential benefit both to the investors, traders, and financial institutions. It leverages advanced algorithms and data analysis techniques to provide valuable insights into the data and market trends. However, it is very crucial and important to note that while stock market prediction models hold a great promise, no doubt they hold a great promise and they ensure that you get a maximum profit, but they are not infallible, they are not permanent, and they are not completely reliable. market conditions can be highly unpredictable. As we all know that market is highly unpredictable. It is on high on one day, suddenly the next day it will go to the low of the year, the very low. And so the unexpected events can also have significant impacts. For example, no one ever knew that the March 2020 would be such a devastating month for the complete world, as the whole world will come to a stop with the lockdown and the markets will be highly affected from the very same impact. Therefore, these predictions should be used as one of the several tools in decision making process, but not the only tool to use in stock market prediction. The point I want to mention here is that I want to make clear in this is that if one is using a stock market predictor, he can use it as its help along with his mind decisions, along with his personal decisions, but cannot wholesale depend on the stock market predictor, that if he says yes, this is correct, then I will invest without even thinking that yes, whether I should or not. If anyone has any questions, he or she can ask. For if even after the completion of this session, still one is having any queries, one can mail me on the email ID mentioned below. Here are the references from which I took the help for the presentation. Thank you, ma'am.
So Shubhi, you're done?
Yes, ma'am.
So first of all, you should add a reference slide before your thank you slide.
Okay, ma'am.
And before then Q&A slide.
Okay, ma'am.
Okay. And other than that, you haven't used any photo, nothing practical. It was just all about data.
It was just about the project synopsis. The very first step was to explain that how I will pursue the course. And similarly, the next step will be to make the model in the subsequent presentations.
Okay. I know it was a synopsis, but still you are explaining something. So you might be using some references. So there must be some photos and something practical must be there. So like a beginner who doesn't know about stock market, their prediction and something like this. So how he or she will be able to understand that without a photo, without a practical use of that?
Okay, ma'am.
So try to add that. Other than that, are you using machine learning algorithms in your project?
Yes, ma'am. The project is to incorporate a machine learning algorithm, make a model, and then evaluate the data set provided.
Okay, but you haven't mentioned anything related to machine learning.
Ma'am, the supervised machine learning algorithms, which I've explained in the very first slides, was itself asked to be incorporated in the presentation itself. And it is asked to ensure that all these algorithms are itself used to make a model out of them.
Okay, can you name some model? Algorithms.
Yes, ma'am. Random forest or neural networks or logistic regression, linear regression, k-nearest algorithms, k-nearest neighbor algorithm.
Right. Okay. So Shubhi, you have added examples in every slide, so that was great point. Like you were explaining everything with examples. That was nice. Other than that, it was a synopsis, but data was too much. Like whole of the slide was covered with data only.
Okay, ma'am.
Try to add in that in some points and make it little short and to the point. It was too long. Okay, and other than that, okay, what are the other methods of cross validations that you have you have mentioned method something related to this, some red and things were going on.
Yes,
what other method you can use there?
Ma'am, there are various evaluation metrics such as the confusion matrix, or one can use the F2 score. There are various evaluation metrics. These are just the evaluation parameters through which we can evaluate that whether the model is predicting well or not. So the cross validation is just that I have different data sets, the different subsets of the data. And then the whole sole aim of the process is to ensure that the model performs very well on each set of the data. If I am providing him just the beginning of the data, then it might perform well, but not on the subsequent part. And if I will be providing him the end, that it might perform well or not. So I want him to perform on each part of the data so as to ensure that the model is robust at the same time performing really well.
Okay. So overall, nice explanation, Shubhi. Everything was explained very nicely. So I will give you overall feedback on your mail. Okay.
Okay. Thank you, ma'am.
Okay. So Smeet, you can start your presentation.
Yeah. Good evening, ma'am.
Good evening.
Actually, I'm traveling right now. Is it okay uh, for me to give the presentation like this
Like this means? Okay, you are
in a
in.
car?
Okay, okay,
I'm
okay.
sitting
No,
in a car.
no problem. You have to just share your screen
Is it a
only.
problem?
No, no, no,
Yeah,
not a
yeah, sure.
problem.
Okay, ma'am. Ma'am, actually, I had a doubt while being in the last presentation. I joined late, so
Okay.
you asked me to give the presentation later. Um, so then I joined again on the next Tuesday, but there was no one on the Zoom link. So should I give the last presentation only, or I have assigned another task for
So
today's presentation?
you have not presented your last presentation, right?
Yes, yes.
So you need to complete your pending presentations first, then you can move forward. So what you can do is just give your last presentation.
Okay, ma'am.
Yeah.
Sure. Okay, so our topic of today's presentation is future location prediction system, and my name is Smeet Nalawade. I am from DY Patil College of Engineering and Technology, and my current BTech degree is in artificial intelligence and machine learning. So let's first discuss the content of our today's presentation. So we are going to talk upon a few things. So the first one is what is future prediction and task introduction. Then we will going to discuss about the application. Following to that, what is data IKU and why we use it. Then in our today's task, we are going to work upon two main algorithms, that is lasso regression and XGBoost. So we are going to cover the part as well. Also, then I am going to show the demonstration of the uh, our project with the workflow, and then we will conclude with the presentation. So let's first talk about what is future location prediction system. So the future location prediction system is an idea where we use the data and the technology to predict where should things might be or happen in future. So the task introduction is we are going to use data IKU for our future location prediction system by setting up it through AWS EC2 instance with a provided data set and tools to create a model, analyze, train, and visualize the data set. So let's first discuss few applications. So the applications of future location prediction system may vary from so many aspects. So like first in disaster management, so it is uh, the future location prediction system can predict the disaster management as well in multiple businesses, also in transportation and traffic management system with uh, and furthermore in urban planning and climate change mitigations as well. So these were the applications of our future location prediction system. So let's first understand what is data IKU and why we are going to use it. Because our whole project is based upon data IKU. So data IKU is a company which was established in year 2013, which is a company which is based upon machine learning, deep learning, and artificial softwares, which provides a platform for users to work together and create the project which are based upon machine learning and deep learning algorithms. So why we use it? So data IKU provides various. Uh, just a second. Uh, Sorry about that. So why we use it? So there are multiple factors which is why we use the data IQ, like data preparation, visual data, auto machine learning algorithms, collaboration with another creators or users. It also provides a large amount of flexibility while working on projects. Also, the governance and security, we are able to govern our model properly, as well as the security aspect. So let's move further. So let's understand the lasso regression algorithm and why we are going to use it. So lasso regression algorithm basically means least absolute shrinkage and selection operator. So it is a algorithm which eliminates irrelevant and unnecessary parameters from the dataset, which provides us basically more accuracy of the prediction model. So as we are as we are gaining more accuracy and model interpretation, so these are the reasons we are using lasso regression for our model today. So the second algorithm we are going to work upon is XGBoost. So XGBoost is an powerful machine learning algorithm that uses prediction based on data. So there are few key points which I have mentioned. So like XGBoost provides us more about feature extraction, more higher accuracy, feature importance, ensemble learning, handling non-linearity, or higher performance. So these are the things which we should already know about XGBoost. So let's move further towards the demonstration. I have attached the screenshot while I was uh, performing the task. So here, first, while we are on AWS instance, on AWS platform, so here we first create our instance. So in that instance, we are the purpose of creating the instance is to accessing the data IKU platform. So here we first install the data IKU platform through EC2 on AWS. Here we are launching our instance. After that, in Data IQ, we have to create our license, and through that we have to so we gain a login ID and password, which we are going to work upon. So here we log in into the Data IQ. So the first step in Data IQ is to create a new project. So we here I have named the our project as Future Location Prediction System, and the project key I have set similar to the name, so it will be easy for me to go back and understand or work upon it later. So after that, the next step is to import the data set. So we have imported a predefined data set which has 7 parameters like event, time, start and end, also with latitude start and latitude end, with longitude start and longitude end, right? So after importing the data set, so here is our broad data set. I have listed it. So then the next step is to choose an algorithm to work upon. So like I previously told you, the first algorithm which we are going to use is lasso regression. So in data IKU, we get a set of algorithms which we can work upon. Like I told you, data IQ is already based upon deep learning, machine learning softwares. So here we get a list of multiple machine learning and deep learning algorithms. So we are going to select lasso regression. So after selecting the lasso regression, we are going to set the metrics for our algorithm. So there are multiple metrics through which we can test our algorithm, like confusion metrics, F2 score, and R2 score. So here, so after selecting our metrics, we are going to move further towards the feature handling. So in feature handling, we get multiple options, but we are going to select four out of them, like event start time, event time end, and longitude start and longitude end. Talking about the longitude, we are going to use it in XGBoost algorithm. So here, the further step is to train our model with lasso regression algorithm and the dataset we have predefined earlier. So after training the model, so here we get the our R2 score as 1.0. Also with that, we get brief information about how our model has run. So after training the model, the next step is to deploy the model. So we are going to deploy our model here. So yeah, so after deploying, deploying the model, we get a flow chart, which is actually called recipe in terms of data IKU. So here we first have created the data set, or we have imported the data set. After that, after that, using lasso regression, we are predicting the destination of latitude. So here is our a code which we are going to use to measure the model's accuracy and also the Pearson correlation. So upon running this code, we have got the Pearson correlation as 0.999. So let's move further to XGBoost algorithm. So the similar steps are followed by choosing the XGBoost as lasso regression. So we have set the metrics of XGBoost as a R2 score similar to lasso regression. So here we again got a brief idea about the performance of the model. So our R2 score was similar to lasso regression as 1.0. So we have targeted the longitude end in XGBoost. So here in our data set, we have actually predicted the longitude as you can see on the right hand side. So again, we came to this slide, which is the recipes slide. So here we have actually used 4 data sets and 2 models, which have provided us with 4 recipes. So again, so basically our task ends here, but we have actually moved further and tested other algorithms as well. So in data IQU, as I already mentioned above, we get a set of multiple machine learning algorithms. So we are going to test. So we are going to train and test them and compare which algorithm provides us more accuracy. So we have selected almost every algorithm out of 13 algorithm and except deep neural network because it is not relevant for our dataset right now. So after training and testing, here is the chart of the result. On the left hand side, you are able to see the accuracy score of the previously trained models. And in the graph, we are able to see the session to data visualization and through which we are able to see so we have actually plotted the accuracy and the timing so it will be relatively easy for us to understand and to compare which algorithm gave us more accuracy. So here is our further flow chart in which we have created 3 models and which gave us 7 recipes. Okay, so while concluding, we throughout the task we have built the product location prediction system with the relevant dataset provided. Lasso regression is basically the algorithm which we have used to predict latitude, and XGBoost is an algorithm which we have used to predict the longitude. And through both of them, we have actually gained a higher accuracy if we compare it with other machine learning algorithms in data IKU. So both of these algorithms are suitable for us for giving us the best accuracy of the prediction model. Okay, so here our slide ends. Thank you. And do you have any questions or suggestions for me?
So Smeet, you haven't added any reference slide and Q&A slide.
Yeah, those slides are missing.
Yeah, so try to add those slides in this. Other than that,
Okay.
okay, what is AWS?
AWS is a platform which is provided by Amazon for users to work upon. Like it is a paid software where multiple creators can use their services which are paid. Like it is a cloud-based software. So where the creators or developers can go and access their services without actually having them on board or in a physical manner, which have which may be somewhat costly or hard to maintain. So like AWS comes into play in that case and provide cloud-based services to the developers.
What other options do you have other than AWS?
Other than AWS, there are services which there are other service providers like Azure, also Google Cloud.
Yeah. Okay, what is EC2?
Yeah. EC2 is sorry, I'm not able to remember.
No problem. Like
Yeah.
try to research more about your project what you are
Yeah.
working on. Other than
Yeah.
that, I will give your feedback on your mail, okay?
Yeah, sure, ma'am. No
All
problem.
right. So thank you everyone for joining today's session. I will end the meeting now.
Yeah. Thank you. Good night.